The gold prices have risen today for a fourth straight session, gaining nearly a percentage point in the intraday market to a two-week highs as weaker equities spur demand for the safe haven asset. Meanwhile, Trade Minister has said that the government will revisit the gold import norms in India and that there is enough gold supply to meet jewelers' demand, and also PSUs have ensured adequate gold supply in the market. Let's get in then. Mohit Kamboj, President, Bombay Bullion Association, exactly on those cues there. Mohit, hi. Are you expecting a turnaround in policies for gold in 2014 as the government perhaps seems to be hinting at?
When the new government comes, new policies will be there and which will be beneficial for the businessmen and for the industry and for the workers and the handcraft person. Small 50 lakh karigars which has been associated with gold industries are going through a very bad shape and bad phase of time, which is only due to the government policies and bureaucrats, those who have made the policies to ruin the industry.
Mohit, in that light, what kind of a range are you looking for gold prices in 2014 in the international markets as well as the Indian markets?
From last 2 years, there has not been a return on investment in gold. If the taxes has not been levied, so people may have lost 10 to 20% money if this has not been done. So I think in 2014 the prices will be stable. It can move, a market can go up to $1,300 or $1,350 till March. But in the future, I think gold will remain stable for a period to come.
If you were given a choice between gold and silver, Mohit, where would you prefer, or where would you advise people to invest in?
I will prefer investors to invest in gold because when it has been depreciated at 40%, when you compare gold as investment in years to come, in couple of years, people may see again a price of $1,950 or 2,000 ounce in a couple of years to come. So it is the best way to in 2014 also to invest in gold.
A final question, Mohit, then what's your outlook on the Indian gold demand? Because the last quarter, the last month also has seen a decline coming in for demand. The import curbs are still there, and there are these lots of news of gold perhaps coming into India via unofficial channels.
Manisha ji, to be very clear, every year there is 800 to 1,000 ton of gold import in India. When the new policy has been made in August, so the import has come down to 25 to 30 tons per quarter this quarter. When there is a quarter import of 250 tons and it has come down to 30 tons. So somehow the other how the gold is coming in the market and the demands and still there is a demand of gold in the market. People are ready to pay premium. People are paying premium on gold in India. Smuggling is in full form in India. We must have heard many news and that airports, the NRI gold is coming in many forms. So you cannot stop the demand of gold in India. And in 2014, the demand will remain same. In India, there is 600 to 700 tons of demand of gold in India, which India has to import every year.
All right, Mohit, we'll let you go at that. Thank you so much for joining us. That's the view, of course, coming in from the Bombay Bullion Association, where they say that the policy change may not happen too soon, and they also are expecting the gold prices to perhaps outperform or at the least stay stable in 2014. Let's get in then. Shiv Srivastava, who's Managing Director and CEO at iGuru Research and Advisory, he also joins us live on the show. Shiv, hi, welcome. What's your sense really coming in for the gold and silver prices now? The first week of 2014 clearly has been positive.
Yeah, we have seen some smart recovery in gold from the recent dropout, and I think 1240 to 1250 is a major resistance in international market. In India, I think that it will go up to 29,500 to 29,700 in coming days.
Vijay, how would you look at the kind of reaction that we have seen in gold and silver? And on the 1 week charts, are you now confident, or are you now, would you like to put money now for the next week as well?
Not really, Manisha. 29,200 would be a level that's likely to be a meaningful resistance for the bulls here to overcome. In relative comparative basis, I think silver is better poised, although the appreciation potential of silver is also constrained to 45,800 to maybe 46,400 on the upside.
Okay, watch out for those levels then in the Indian and the international markets. But Shiv, how would you look at the energy space now? Because that really seems to be quite choppy. Markets are awaiting the US inventory data at this point in time. But having said that, the kind of very high volatile moves that we have seen in this week, how would you want to plan your strategy?
Yeah, we have seen a smart dropout in steady as the Libya production starts. I think the crude will be moved to today upward because as per inventory expectation, it will go down up to 2.2 million. I think some bounce back expected in today's session. It will go up to 6,000.
Vijay, how would you look at the crude oil prices now? Because on a weekly chart, we are looking at a 5% decline. Is it too much of a fall, too soon? Do you think there's some bargain buying coming in?
Bargain buying remains a possibility, Manisha, provided you get crude at 5,920 odd levels. That's where I would feel comfortable taking a punt. Now, even though it relatively appears a bargain kind of a situation for higher risk short-term traders, the probability of 5,880 should not be ruled out. So if you are initiating a long position at lower levels, one has to be prepared for a few false moves before prices really stabilize or even rise. So buy the dips rather than chase the prices at the current level.
Fair point. Shiv, also, how would you look at the base metal prices then? Because the last couple of weeks really have been positive. The fundamentals also have worked, and we have seen a huge turnaround for the month of December as well for most of these metal prices. Would you now then be cautious into buying into them? Because more or less we are looking at some choppiness coming back here.
Yeah, I'm not very much bullish on the base metals. As you have seen, China data is not encouraging, and I think copper and lead will be the most sufferer in coming days. I think copper and lead will be down in 1 to 2% in coming days.
Vijay, which one would you want to choose on in case of the base metal space, and how are you reacting to the next week's trade numbers now?
Manisha, throughout last week I've maintained that the hedge funds, who are the largest players in the commodities market, could have been responsible for perking up prices in the industrial metals due to the end of the year considerations. If at all I was to put a finger on a commodity to trade in the industrial metals space, I would favor nickel, although at 868 levels I'm not comfortable buying. I would give it another 25 to 30 rupees decline before comfort comes back in, and at that level I don't really mind initiating a few small-sized long positions.
Okay, there's no clear-cut view on coming in for the base metal prices, and clearly not a buying call coming in from our experts as well. Let's get on board then. Chong Kim Seng, he's CEO, Bursa Malaysia Derivatives Berhad, and he joins us on the show to talk about how the commodity trading in India and abroad is going to pick up in sense of especially the agro space. Chong, hi, welcome to the show. How do you see agri trades panning out for the year 2014, especially in the global markets?
I think it continues to be a very exciting sector. I think it's going to be quite volatile. I think experts are saying that the supply and demand situation is still very unclear, and especially in the space of palm oil, for example, the demand from the biodiesel sector seems to be on the increase, and a lot of things are going to happen in 2014. I believe that it's going to be a very volatile year, and risks will be there, and businesses should take heed to manage those price risks.
Chong, how do you see the commodity markets, trade out in this year, especially when you look at the kind of numbers that we have seen, the kind of policies that seem to be coming, not just in India, but around the world?
I think national markets, once they go to a certain stage, becomes regional markets, and then they have every chance to become what we call a global market. So I think that's what I can see in India. There's a potential for a lot of growth.
When it comes about the trading volumes, where do you see that coming in maximum from? Is it India? Is it from the Asian markets for that matter? Or it's the developed market which still have more money spinning on in these trades?
For us, over 40% of our trades comes from foreign participants and foreign institutions. So we have a pretty good sense, let's say 40% from foreign, 60% from our local trade. So it is important that this level of composition of both domestic and foreign trades keeps on growing.
Also, how do you see the participation in India and Indian participation abroad? Do you see that growing? I mean, the way the commodity prices, the commodity supplies are increasing. Do you see more hope in that?
I think from India, a lot of the Indian companies who are located outside of India are already participating in our market and also in the Chicago markets. So I think the expertise actually is already there. Then, of course, you're talking about whether the domestic industry and domestic participation can be a lot better. Sure, they all can be a lot better. But I want to say that the expertise is already inside Indian companies. The only thing is to take it forward and take it to grow it even more. That's how I see India in 2014. I'm sure, again, I've said before, participation in India and from India will increase in 2014.
All right, I appreciate you joining us then, Chong. That's the view coming in from Bursa Malaysia Derivatives. They are expecting the volumes to go higher, and they expect a lot coming in from India in sense of volume, participation and prices as well in 2014. Well, that's about the volume, but how about the prices? And Vijay, how are you looking at the chana prices now? Because this year has started positive for that.
Manisha, I remain optimistic on chana, and I think that any decline below the 3,000 mark in the mid and far month series would be an invitation to buy. And I think come end of March or maybe even April, and you will see chana prices edge higher. My target for appreciation in chana is approximately 10% in the next 4 months, whereas the downside potential is approximately 5%, if at all. So the risk-reward ratio seems to indicate that you should be buying the dips in chana.
All right, a clear bullish call coming on for that one. Shiv, which one are you picking? Where could you give a bullish call in coming couple of months then?
Yeah, I'm also bet on chana because I think it will go up to 3,200 to 3,250 in Feb.
Shiv, also what your sense coming in for the edible oil space now? What kind of trades would you want to execute there?
I think soybean will go up in coming days, and I think it will 100 to 150 rupees bounce back expected till Feb.
Vijay, what's your sense on potato prices then? Because that is something that also has been running up.
Manisha, I'm bullish on potatoes, and I think you will see potato prices in the April month futures, which are quoting at a slight discount to March, head higher than the 1,000 mark. So here again, I would be a keen buyer on potatoes in the April month futures, which is the second month future. It's currently at 971. If you see prices of sub 960, I think it's a buy.
Okay, so we have all bullish calls coming in for the agro space. But with that, Shiv and Vijay, thank you so much for joining us with your strategies. And that's all the time that we have on hot commodities. But